2016 will likely go down as a year most notable for the last 2 months, not only in politics, but in financial markets as well. The election sparked a market rally that few predicted. Joe Krier, president of Krier Wealth Management, is here to discuss this and other key events for 2016 and give us a glimpse into what is coming up. Good morning to you.
Hi, Stacy.
So let's talk about what impacted the markets. And if you remember, towards the end of last year, things were going pretty well, and then we hit January of 2016 and things went down.
Yeah, everybody's been focused on the rally that's come in the last couple months here, but literally January 2nd of last year started in a major market sell-off that continued for almost 6 weeks. And, that was sort of induced by some turmoil in China, but the markets got it together and kept going. Fast forward a few months, and along comes Brexit, where Great Britain decided to leave the Eurozone. And, some of the ramifications of that were thought to come over and hit U.S. shores. Actually, the market only corrected for a few days, but it was very violent. And I'm bringing these up because people need to remember that there could be violent events in the markets coming in our future here.
Right, and then we had the election surprise, and the Dow is now close to 20,000. If you remember before the election, it was what, 18,100, hovering around that number?
And it was kind of selling off into the election.
And then it went down on election night.
It did. It went down 800 points on election night and recovered starting at about 1 a.m. To everybody's surprise. The majority of pundits said that if Trump won, the uncertainty that he would introduce to the markets would be too much for the markets to bear, and they would, immediately collapse. Well, that didn't exactly happen, and we've seen financials and energy as a couple of major groups just really lead the way higher here.
Okay, so let's look at some positives going into 2017. We do have, an improving U.S. economy.
We do, and this goes back to 2008. The economy's been trying to get on its feet for literally 8 years now. It's picking up some momentum. Unemployment is down to 4.6%. Consumer confidence is up. There's a number of other good things going on. Infrastructure spending and tax cuts seem to be on the Republican agenda.
Donald Trump has said he wants to make America great again and improve infrastructure in the country.
Sure, and a big part of this rally is anticipation of that happening. I think once we get into the Trump presidency that doesn't start for another month, things might slow down, peak out a little as people realize, hey, there's a process to go through to get these things implemented.
Yeah, it's always easier when you're a candidate, isn't it?
It sure is.
Although he does have a Republican House and Senate.
It kind of paves the way for cooperation. It is unusual that there's been tension from the beginning between him and Congress, even the Republican parts of Congress, and that could work in our favor just to temper things, because you don't want government just having their way with everything, because that hasn't worked out so well in the past.
That's true. So let's talk about some potential negatives, and we've already seen interest rates rising subtly.
Yes, and Janet Yellen and the Feds, they know they need to raise rates. They've been abnormally low, so they're going to go up to get normalized a little bit here. But it does tend to slow down business activities. Our mortgages, our credit card rates start to go up, and that does have a dampening effect on things.
There's also global turmoil, trade policy. Things seem a little unsettled on the international front.
I would suspect that the first part of a Trump presidency is going to be dealing with some kind of a global crisis. Europe is really on the rocks now, and their banks are in the kind of bad shape that our banks were back in 2008. If, Italian and Spanish banks go under, that has a direct impact on us. And, we're going to have to deal with that. So, the key here is to just anticipate some volatility in the markets. When you look at the numbers for 2016, they look okay, but it was a heck of a ride from beginning to end.
Okay, Joe Krier, president of Krier Wealth Management.
Thanks, Stacey.
Thanks so much.